Let's go live now to Craig James. He is the Chief Economist at the Commonwealth Bank of Australia. Craig James, good to see you. Thank you for your time. First of all, on the decision pending tomorrow, is there any or much justification for another 0.5% rise in your view?
There's probably one or two more, and that'll be it in terms of the Reserve Bank. And we're favouring one of the smaller moves in interest rates, 0.25% tomorrow rather than 0.5%. The Reserve Bank Governor has told us that 2.5 to 3.5 is the range where the Reserve Bank likes the cash rate to be in. After tomorrow, even with a small rise of 0.25%, they'll be in that range. So they'll be more or less where they need to. They also need to be seeing evidence that inflationary pressures are under control. And fortunately, today we've had the report from S&P Global on the manufacturing sector saying that there has been a substantial easing of inflationary pressures across the manufacturing sector. At the same time, today we've seen another fall in home prices across the nation, 1.4% fall in terms of national home prices. So these rate hikes are biting. They will continue to bite. We're closer to where we need to be in terms of a peak for interest rates. So we're favouring a smaller 0.25% interest rate hike rather than 0.5%.
Yeah, okay. So what is the RBA looking at? Because you say house prices have come down a bit, the inflationary pressures seem to have eased. We've got that first monthly data. We used to get it quarterly, every 3 months, and that shows it is at 6.8%. So, I mean, what data is the RBA looking at the most? What are they basing their decision on tomorrow?
Well, they're looking basically at all measures of prices and wages at the moment, because that's the key focus, and that's the focus right the way around the world at the moment. The public enemy number one is in inflation. If inflationary pressures are coming under control and moving in the right direction, and the Reserve Bank is getting more confident about inflation getting under control, then it'll slow the pace of interest rate hikes and certainly come to a stop at some point in time. We're looking for two small 25 basis points moves, one in the next month, the latest month is coming out tomorrow, that meeting tomorrow, and one in a month's time. And then certainly the Reserve Bank will be sort of slowing down the economy with the level of interest rates. As I say, I mean, we've already got evidence, sort of slowdown, sort of starting to come through. And as Ed pointed out beforehand, it takes some time for the full effects of the interest rate hikes to slow down the economy. So we need to give the economy time to be able to absorb these interest rate hikes, respond to them, before the Reserve Bank just keeps on sort of lifting rates sort of month after month.
Yeah, it sounds like that they should probably hold off on that 0.5% rate based on what you and we've heard from Ed this morning. But Craig, before we let you go, on a more medium to long-term aspect, how is our economy looking? I mean, we're looking down the barrel of recessions in major economies all over the world. We've seen the OECD warnings. Can Australia avoid a recession if the rest of our trading partners don't?
Well, we've shown it in the past, and I think we'll show it in the future that we can certainly avoid going into a recession like other parts of the globe. Our economy is in fundamentally sort of great shape. You look at the job market, so we've got an unemployment rate around about 3.5%. We haven't seen something like that since the 1970s. Inflation, while it is higher in Australia as it is in other parts of the world, we're by no means anywhere near where they're in other parts of the world. Europe has got an inflation rate of 10%, UK around about 10%. So our underlying sort of rate is nowhere near that. So it's closer to 5%. The housing market is adjusting now to the higher interest rates, so it's getting sort of brought under control as well. We've got a current account surplus, so in the trade sense, we're kicking goals in a big way. Record trade surplus, record current account surplus, and the federal budget, the outcome for the last year was just handed down, and it was substantially better than expected for two key reasons. We're spending less in terms of money, so expenses rose by less than expected, and revenues coming through. Companies are making money, a record amount of money so companies are making. So with the taxation collected by companies as well as by individuals going into government coffers, and that's boosting their overall outlook. I think of all the countries in the world you'd want to be at the moment, you'd want to be Australia in dealing with the situation that we've got ourselves at the moment.
Well, that is a good optimistic note to end on. We love being Australian, and that's a good reminder. Craig James, thank you. We'll check in soon.